and you're not doing leverage, you can now take that gold position that's not going in your way. You can turn an intraday or day position into something that's an appreciating asset. You can turn it into an investment and not actually realize the loss. Obviously, you have to think the opportunity cost of the capital. But Rishi that we had on recently, he's a quant trader and has a $750 million under management. Top 3 guests that I've had, I think, top 3 conversation. And he was talking about this idea that if you have a stop loss in place, because he doesn't believe in stop loss, if it's come towards your stop loss now in a buy position, now it's actually cheaper than when you entered. And if price has gone lower in a short amount of time, but the underlying reasons for getting into that trade hasn't changed, which it probably won't do in a 3-day time horizon, then maybe the correct thing to do is buy more. And this is a luxury of a non-leverage environment. But I think in the prop firm arena, 4% is probably gamifying it a bit too much, which is probably fine in the evaluation portion, because you don't want to spend 3 months trying to pass phase 1 if you have the money to afford a few. Treat it like a game that it is, and then treat the funded accounts a bit more sensibly, so you don't have to go through the time void of trying to get funded again. But it's also that thing of, as Larry said, it's a bit personal based on what you can stomach, because everyone has a different risk appetite. And